Philly Fed came in at plus 12. Plus 12 last month was minus 13. Now, the Philly Fed basically is a manufacturing number. It shows you that there is an actual uptick in manufacturing. When we were at 30,000, right, on Bitcoin, or 31, even 31.5, everyone was saying, oh, new bull market starting. This is here it goes. Where have we come? We've come back in, and it hasn't broken out. It has to, the markets in general, move opposite the majority. Because if the majority is already long, who's left to buy? You have a few buyers left to convince, and that's a problem. By the way, we saw a pretty dramatic sell-off, not only in crypto, but also in stocks. The key here was the FOMC minutes that were released. Now, the minutes are, for definitional purposes, essentially the notes that were taken in the last meeting. All right, the last FOMC meeting where the rate decision, remember in July, they hiked rates by 25 basis points. Now, the key here is that generally they fudge these a little bit because they want to send a message. So again, if they took meeting minutes in the last meeting, they can adjust them slightly to send a message to the markets. That's what they did yesterday. They stayed surprisingly hawkish. Hawkish means they're still leaning towards potentially raising interest rates. Jobless claims came in surprisingly strong, all right, meaning that less people filed for unemployment. The number was down 11,000 from last week. All right, so again, the idea is with jobless claims, it's a number that the more people that file for unemployment, that number goes up. So if it goes down like we saw this week, it means less people filing for unemployment, less people potentially laid off. Now, again, this goes in the same form where we're starting to see, or we've been seeing, a strong labor market. So far, just to be fair, I have not seen any indication that the labor market is cracking yet. Now, what's important about that is, to me, that's going to be where the stock market takes its big dive. It doesn't mean that it's not overvalued. It doesn't mean that NVIDIA should be trading where it is. We'll find out, by the way, next week, next Wednesday after the bell, NVIDIA reports. That's going to be a huge report because you could argue that this week has been led to the upside, or at least cushioned, by NVIDIA continuing to stay strong. Yesterday was down a little bit with that sell-off, but early in the week and late last week, it really started to roar back.
Hello and welcome to Money Talks. In this video, we'll dive deep into the captivating world of the crypto market and uncover the latest news in stocks. Get ready to stay informed and make smarter financial decisions. Now let's begin our enlightening discussion with Gareth Soloway.
Philly Fed came in at plus 12. Plus 12 last month was minus 13. Now, the Philly Fed basically is a manufacturing number. It shows you that there is an actual uptick in manufacturing. So all of a sudden, and listen, a few data points don't make anything, but we've seen a lot of weaker data except for jobs numbers, but now we're seeing a little bit of stronger data. We've also seen inflation in the CPI and PPI, which was last week, start to uptick. A stronger economy, while many of us say this is fantastic, what it does is it can potentially increase inflation, and it means the Fed may have to hike more to get things under control. The other thing I want to point out here is this, is that if you go on the Federal Reserve Atlanta website, so the Federal Reserve's Atlanta website, Atlanta Bank essentially, they have, get this, GDP for the next quarter at an estimated 5.6%. That is a huge number. Now, are they totally out of their minds? I don't know. I mean, up until this point, I would say, yeah, I would be shocked if we see that strong GDP. Then again, Japan also showed us recently that they had a 6% number on GDP. But my point is that stronger economic news is not necessarily what you want to see if you want the Federal Reserve to kind of halt their hiking of rates, because stronger economy usually yields stronger inflation. In terms of this, look at this. The housing market is at rock bottom, says Redfin's CEO, as higher rates and prices take their toll. All right, so essentially this is mind-boggling to me, and I wanted to bring this to your attention, because if this is the case, and I want to flip over to this chart right here, this is your Case-Shiller housing price index. So this is the dip that we saw in housing prices just over the last, let's say, year or so. All right, notice it's already going back up. The Redfin CEO is saying the bottom's it. Now, again, I'm a contrarian. When someone says the bottom's in, I usually think the top's in. All right, when someone says, hey, everyone's bullish, I'm usually moving bearish. Recently, we saw Jerome Powell saying, hey, the Fed doesn't project a recession. Now it makes me think there's more likelihood of a recession. Now, why do I think that? Well, just go back to 2008. Ben Bernanke came out and said, hey, there's not going to be a recession. That was in early 2008, just before the markets collapsed due to the financial crisis. So in general, I'm very, very skeptical when you see these players saying, hey, the bottom's in, or, in this case, maybe a top is in or whatever it is. I start thinking the other way. By the way, that goes for crypto as well. When we were at 30,000, right, on Bitcoin, or 31, even 31.5, everyone was saying, oh, new bull market starting. This is here it goes. Where have we come? We've come back in, and it hasn't broken out. It has to, the markets in general, move opposite the majority. Because if the majority is already long, who's left to buy? You have a few buyers left to convince, and that's a problem. By the way, that's one of the reasons why I'm net negative on NVIDIA, because every analyst out there, every person is saying, hey, AI is going to change the world, and I agree with that. I just think that valuation does matter at a certain point.
Don't forget to join us as we explore the unfolding events. How low can the Bitcoin price go? Let's take a quick look at this topic. Then we turn back to Gareth Soloway. BTC price predictions amid volatility. Bitcoin's price drop, fueled by SpaceX's BTC write-down, prompts speculation about its future direction. Amid the recent market shock, key support levels are being closely watched, and analysts' predictions range from $25,000 to $9,000. $25,000, an epic level and historic catalyst. Analyst Gareth Soloway sees $25,000 as a significant buy-in point for Bitcoin. He recalls how news of a Bitcoin ETF led to a price surge from $25,000 to $31,000 earlier. The $25,000 mark holds psychological importance for traders, downside risks, and price targets. However, if BTC breaks $25,000, Soloway warns that $20,000 could be the next destination. He even suggests the possibility of four-digit BTC prices, with targets at $15,700, $12,000, $13,000, and even $9,000. Yet, he emphasizes his long-term bullish view on Bitcoin. Bitcoin as a market indicator. Bitcoin's behavior is viewed as a fire alarm for global liquidity by analysts like Sam McDonald. Its price fluctuations may signal larger economic shifts, possibly indicating an impending stock market crash. Liquidations and market resilience. Bitcoin liquidations peaked around the same time as the market shock, resembling a previous November 2022 event. However, Bitcoin's overall resilience and the cooling of liquidations suggest that the market is weathering the storm.
Let's take a look at this. Here's your dollar chart. Okay. Well, let me jump over here. Look at the channel from here to here. And now here you did break above it. This is where the dollar just kind of got crazy, right? And again, that was in basically, by the way, this is when the market bottomed, when the dollar topped. So as soon as basically this rally has been. But what we're seeing now is look at how you came back in the channel and reestablished the channel. Low, high, high, low, high, low. So again, what's happening? What's the likely target or what's the likely move of the US dollar? And look at what it's doing today. It's already starting to pull back. So again, doesn't mean you have to come back to the low end right away. I mean, it could come down a little, then go up, then pull back. The idea is the channel, again, is the key. All right, so again, another chart where we have a channel. But by the way, using channels are one of the easiest things to do, and I want to show you this because this is going to be a secret. You don't even have to really be that good at technicals or trend lines to do channels. Let's just try an arbitrary. I'm just curious if I can find an arbitrary chart that doesn't have a channel on it here. I don't know. Let's look at oil. Let's look at U.S. oil. All right, so oil is bouncing today. Oh, I got to get rid of this here. Let's go back to our regular chart. So oil is getting a small bounce today. No big deal. That's not really important. What I would like to do with you is say, okay, let's take a look at this. This is your monthly chart of oil. Monthly chart of oil. Going back to the crazy move up in 08, the collapse, and then all this chop, the move down here. This was COVID. The big move up on Russia invading Ukraine, and then the pullback here.
And that concludes an insightful episode of Money Talks. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing!